Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from MPIinvest.com. So, talking about the markets yesterday, it was a expiry, and the markets were supposed to be volatile, but seriously, the markets have kind of had a super consolidation. In fact, the market opened with a gap up, and from there, throughout the day, it was almost flat. End of the day, there was a small selling, and in fact, end of day, we could see the markets actually closing just below 19,800. So, the markets have seen 19,800 as a resistance as of now. And apart from that, we also saw the markets being really bearish on the IT sector. So, if you see yesterday, after the TCS results came, the results were decent. In fact, not bad, I would say. Of course, it did not meet analyst expectations. But of course, the good thing was the results were positive. That is good. But the only thing is the guidance again set forward is actually lower. Now that was not something great, so we could see good selling in IT sector, mainly the heavyweights. In fact, it has kind of become a pain point at this point of time for IT heavyweights that they are not able to really see a big margin of increase in their profits and revenue. But one good thing was about TCS results was that the order bank was really good. Now, same thing yesterday, we had also expected the Infosys and HCL results, and they also have come out after market hours. In fact, Infosys results were better than analyst expectation, so that way it was good. In fact, they had given a poor guidance last time. If you remember, last time when they opened up, the guidance they had given was something which was much lower, and that's why we could see the markets actually selling off Infosys completely. But this time, the same thing has happened. They have actually gone conservative. If you remember, last time also when they had actually announced the results, I had told you that it was looking more conservative. That Infosys was not, being just, I would say, more humble by giving such low guidance, and they've actually shown results better than that. So same thing has happened this time also. They've given a humble guidance, and that is kind of taking the IT sector by storm. But I don't think it as a reason to worry. So I have a good investment in Infosys, and I'm just kind of okay with it because I know the company is fundamentally strong, and that will kind of take care of my investment in later stage. Probably it's going to take some time to kind of take forward, but then of course that's a part of the market. So at this point of time, HCL results were actually really good in terms of revenue, but again they also have actually kept the guidance low. So of course that's a known factor at this point of time because of a lot of US banks getting into trouble because of the interest rate hikes. At this point of time, many of the IT companies in India, which is service oriented, because they don't have a product of themselves. So our IT companies are actually service oriented. So being a service oriented company, and most of their business coming in from BFSI, that is nothing but banking and finance and insurance. So that is something which kind of has been affecting their profits as of now. But as things take turn, things should get resolved. Because if you look at the US now, okay, talking about the US reminded me. So after results, we also had the CPI data, the Consumer Price Index that came in, and it actually came surprisingly lesser than expected. So in fact, the expectation was that the inflation will come around 5.4%, but then it has just come to 5.02, beating the estimates, and that is actually a great reason to celebrate for India, because India's target, RBI's target was 6%, and now it is well below, almost 1% below the RBI target, which is great thing. So for India, which is used to 6 and 7% inflation, coming down to 5% is actually a great thing. But if you look at the US, that is something which needs to be looked at, because if you look at the US, the inflation was expected to be within 3.4, but it has come at 3.7%, and that has kind of spooked the market, and we could see the US markets completely falling down over this period. And yesterday we could see a big fall in the Dow. Naturally, when the US markets have fallen, the global Asian markets are tend to falling, and that's what exactly is happening at this point of time. There is some weakness seen, but one good thing I would say about India is Indian market is seeing a great inflow of funds from the retailers in the form of mutual funds. And that's exactly why we are seeing this huge buying by the institutions. So if you see yesterday also, almost 1,800 crores worth of stocks were dumped by the FIIs, that is the foreign institutions, whereas DIIs have bought for almost 1,500 crores and kind of kept that even and have held on to the market. So the entire market journey, if you see the last entire 1 month, the markets have been getting sold into by the FIIs, and the DAs have been on the buying side, that on the big buying side. So there was also a recent talk by one of the mutual fund companies, and they say that they're sitting with a huge amount of cash that can be deployed into the market. So every dip in the market is actually bought into by these mutual fund companies. So today, what could happen? Negative in the US. Infosys results were bad. HCL results, results were good, Infosys and HCL, but the guidance given for forward is bad. So with all this, the markets are going to see a gap down opening. But at this point of time, something very important to see: are the domestic institutions going to support at this point of time? Are they going to buy? If they buy at this point of time, there are high chances the markets can get bought into. That is, if there's a gap down, from there we might see the markets going up. But then, of course, I am expecting the market to consolidate for some more time, because it's actually rallied a bit, and we cannot go against the global market. Like I've told you multiple times earlier, we cannot go against the global markets. So that is something which can be seen for now. Now, talking about today is Friday, and it's a weekend that's coming up. Along with that, the war is, the sentiment around war is changing. In fact, the Israel-Palestine war has actually been factored into the market already. But then that's not enough, because there are, again, Syria is coming to the picture. With all these things, there can be uncertainties that can come over the weekend. So many people who are sitting with decent profits because of this rally may actually think of taking some profits back home. So because of that, we might see some sell-off by end of the day. But one interesting thing that we need to look at is tomorrow is HDFC Bank's result. And HDFC Bank has been shorted for some time now. In fact, last few days it has been kind of recovering. So there are chances there can be a big movement in HDFC Bank based on the kind of short covering or shorts or long, whatever people would actually cover up their positions before the results. So these are two things which are going to impact the market for now. So today market being a Friday can also be volatile, and people can tend to kind of get into some selling mode. Now, only thing to look at for support right now would be Reliance and HDFC Bank, because IT sector has already kind of factored in from the TCS result. Now let us see how the Infosys effect is going to be, because there are chances Infosys also will open gap down, good gap down in fact. So that can actually trigger the market downwards. But since the market has gone down, there are high chances people will look at buying it, and that can also come up. So at this point of time, 19,500 is the next important support to be watched on the downside, and on the higher side, of course, 19,800 will continue to be a resistance. So will 19,800 be broken is the question that we need to look at. So apart from that, it's of course a weekend, so we will be discussing a lot of details about what happened last week, and we will be what are the expectations for next week. So one thing is clear. So now the result season is on. So just because IT sector has started bad does not mean the entire result season is good. Bad. Yesterday there was one more data which came in, which was the industrial output data, and that has come positive, and it has shown that every sector in India has seen a big expansion. So that is a great thing. So with all this, we are expecting other companies to do well. IT was of course weak for some time, but I would say that's completely okay for some time. It will take its own time to recover, but it will definitely recover over a period of time. Well, this is not a recommendation, but yes, I am sharing what I am doing. So apart from that, the focus would be on banking sector, how the banks would do. In fact, the focus would be on HDFC Bank results, because that would kind of set a pace for the upcoming results for the other banks. So that is expected to be positive because of multiple reasons. The industrial output is good. People in India are seeing lower inflation, and also the jobs in India are doing well, increasing, and with industrial output going up so much, the industries and GST collection is doing really well. So with all these things, banks are supposed to be doing well. So I am expecting HDFC Bank results to be good. Let us hope for the best. All the details will be discussed more on Sunday Market Pulse, and also we will look at what could happen the next week. So level for the next week also would be shared on the Market Pulse video on Sunday. By the way, I hope you like this new setup that we've done. So do comment your views, and of course, if you have any questions, you can put in the comment section. I will be answering that in the future podcast. So that's it for now. This is Srikanth Rajan signing off. Until we catch up, on the next video on Market Pulse on Sunday evening, sharp at 7 p.m. So be there. See you. Goodbye. Hey, do remember to press the like button if you love the content that we share. And if you have still not subscribed, I'm sure it's time you subscribe to our channel, because I'm sure we want to grow financially and we are here to help you grow financially. Goodbye.